It was a shaky start to equities trading on Friday, with China announcing that they are once again going to tighten their purse strings by raising the bank's reserve requirements. After the morning session, equities bounced back quite strongly in the afternoon due to banking stocks surging ahead. JP Morgan had a very positive announcement, and this caused investors to pour their money back into banking stocks. In the currency land, the New Zealand dollar traded down slightly during the weekend. However, it remains within 0.5% of last week's highs. Last week, the euro appreciated the most in almost 2 years against the US dollar. The euro appreciated on the back of very successful bond auctions out of both Portugal and Spain. Investors were expected to punish the government's auctions there, however, they came out much better than originally thought. Other major news from last week was the fact that the People's Bank of China raised the reserve requirement ratios by banks by another 50 basis points. Recently, China has been battling very high inflation. This is due to high international commodity prices, which includes agricultural food prices. Food inflation is above about 10% over there currently, and this is no doubt hurting the people over there. The yuan has also appreciated to almost 2-year highs against the US dollar. Skeptics believe that the appreciation in the yuan could just be a formality ahead of this week's trip from President Obama over there. The ASB Commodity Price Index lifted in all denominations over the last 3 weeks since our last report ending the 17th of December. Leading the New Zealand Commodity Price Index was the fact that international lamb prices are very high currently. NZX AgriFacts reports that leg prices have increased about 30% in English supermarkets currently. However, for our farmers, the weakness in the Great British Pound is no doubt impinging margins inside the farm gate. The high reached by the New Zealand dollar of 50 Great British pence is a post-float high, and this is definitely starting to impact our agricultural exports. The major news for this week is the announcement of New Zealand's Consumer Price Index. Our economics team are picking about a 2.6% quarter-on-quarter increase in the CPI, and this will contribute to an inflation of around 4.3% for the year.